Okay, recording now. It is April 25th and it's sunny outside for the first time in never, seems like. And we're going to be on chapter 3, and that means Monopoly as well. So, all right, let's see. Don't know why, but I was hearing noises. Okay, so Monopoly, look at Talia's Monopoly. Anybody else have questions, concerns? All right, let's get going. Okay. All right. So how is everybody on journal entries? You can put it in the chat. How do you feel about journal entries? Yeah, I'm looking at the chat. How do you feel about, they're all in capital letters. Sorry about that. I'm not shouting. How do you feel about journal entries? JEs. Throw something in the chat. Adam, Jibril, Sejan, Talia, how do you feel about journal entries? Can you guys hear me? They're okay, not my favorite thing to fill out. Thank you, Talia. Anybody else? What I would like to do, if you guys are comfortable, is I would like to practice some journal entries and then talk about Monopoly. Does that sound okay for you?
Yeah, that sounds great.
Okay. All right. So let's take a quick look at the calendar, just because I think it's important. Yeah, if I can find it here. I'm going to click on calendar. And we're going to select your class. And we are right here on the 25th for Zoom office hours. And your chapter 3 homework was due last night. And Monopoly is due Thursday. But that's just your draft Monopoly. So go ahead and put it in. The next morning, Friday morning at 7 a.m., you'll be assigned a peer evaluation to look at. You have till Saturday night to get it in. And then Sunday, if you want to make any corrections to your original Monopoly, make those corrections and you can get a higher score. I'm not grading them till I have your final version. Okay. Does that make sense? And then next week, so Monopoly will be due Sunday night, the final version. And then our exam is next Wednesday, a week from tomorrow on campus. Okay. So just be mindful of that. And then we're going to turn around and you guys are going to write your team contracts. And that shouldn't take you more than an hour, but you will need to have a meeting with your teams. So Thursday might be a good time to have that meeting. Next Thursday, we have extra credit. And I'm going to click on that and see if we have, I don't think I have the new poster yet. No. But it's going to be Zoom. You guys can log in on Zoom and watch Monica and learn about networking. And that's super important. And I want you to come if you can. And that way you can be prepared for alumni night. Because it's really kind of awkward. Networking is very awkward. So I will keep reminding you about that. Okay. So for the exam, let's go back to the calendar. For the exam, bring a calculator. Bring pencil, bring water. If you like snacks, bring a few snacks. The exam will be 100 minutes long. Okay. All right. So let's go. Any questions about the calendar? Oh, and I think I sent you all an invitation to sign up for the accounting job shadow. So that is also really important. All these events are like once a year events, so you don't want to miss them. Okay. let's go and new share. I want to go over to chapter 3. Can you guys see my PowerPoints?
Yep.
Okay. And I'm gonna, I would kind of like to, the chapter is divided into 2 parts. One is on the worksheet and the other one is on journal entries. And the idea of the worksheet is to get you used to transactions. Chapter 3, we're just doing analyze a transaction, decide if it's even a transaction, build a journal entry, post a T account, create a trial balance. We're not doing adjustments, and then create financial statements. And you're going to repeat that with Monopoly. So it's real important that you understand journal entries. So something to keep in mind is accounting transactions require an economic exchange. All right. So something has to exchange. So I'm going to give you some questions and I want you to just throw the answer in the chat. And I want you to direct message me so that as many of you can participate as possible. All right. Okay. So the Outdoor Corporation, they lead guided tours, rafting trips, hiking trips. So it's a service company. Everything we're studying right now is service. We're not a company that sells products. We're not like Macy's or Nordstrom. We don't sell physical products. Right? We provide service. Okay. So question for you. They buy a 12-passenger van. Was there an exchange? And remember, we've got assets, liabilities, stockholders' equity, revenue, or expense accounts. What happens when the company, we always do the accounting from the company's point of view. What happens when they buy a van? What's the event that occurred? And they paid cash. What's the event that occurred? Go ahead and direct message me. Anything that you can think of. What happened? Talia, correct. Adam, correct. Anybody else? Sajin, Jabral. So the company now has a van, has a car. So a car, an automobile is an asset. And what kind of asset is it? It's not a current asset because cars last more than a year. It's a long-term asset and it's under property, plant, and equipment. And so just to be general, we'd call it equipment. You could set up another account called automobile, but you don't have to. Okay. So an asset increases and cash decreases. Okay. So that's what I'm headed for. I want your brains going in that direction. If they agree to pay for it in the future, then the asset increases and accounts payable also increases. The liability increases, they owe the money. Okay. Outdoors discusses an upcoming trip with a potential customer. Was there an exchange? Yes or no? Was this an economic accounting event? Talia, you're correct. Sajin, correct. Adam, correct. Okay. So this is a really important conversation because you're trying to get new business, but it's not an accounting transaction because nothing was exchanged. All right. Even if the customer says, I want to schedule this rafting trip and I want to bring 20 of my employees to come on this bonding experience, it's still not an exchange. It's an order, but unless the customer prepays, there's no exchange. Okay. And then Outdoors pays its gas bill. We can assume it's cash. So was this a transaction? Yes, yes, it was. So what's the exchange? Cash decreases and utility expense or gas expense is charged, gasoline expense and cash. Okay. And why is it an expense? Because they've used the gas up. They're not storing it, they're using it up. Okay. All right. So it's really important that you start thinking of the accounting equation as expanded. So assets equals liabilities plus stockholders' equity. But under the heading of stockholders' equity, we have common stock, retained earnings. And then I want you to add plus revenue minus expense minus dividends. Okay? And then we did, and I'm not going to take the time to go through this. I just want to summarize it. But we use the worksheet as a real simplistic accounting system. In fact, my husband is a teacher also, but in the summer he does consulting work and he doesn't have a lot of business, but he keeps all his jobs on a little spreadsheet. And if you're a tiny business, you can do that. Okay, so see how I have assets here and I've listed accounts here. So your job in chapter 3, and it's 13 journal entries, 13 major journal entries. Your job in chapter 3 is to recognize when there's a transaction and what accounts are involved. And in chapter 3, you only have about 20 accounts. It's very limited, okay? So it's a good time to start practicing, make some flashcards or Quizlets, and just really drill on accounts. So right now we have cash, accounts receivable, supplies, equipment. Those are all assets. And you saw them on the balance sheet. And under liabilities, for this worksheet, we're only showing accounts payable. Under stockholders' equity, we have common stock, beginning balance, retained earnings, plus service revenue, minus expense, minus dividends. So we start the company, invest $25,000, cash goes up, and so does common stock. We turn around and we buy a piece of some computers, cash goes down $6,000. We use those brackets. That's probably new for most of you. We use those brackets instead of a negative sign, and it's because it stands out more. Cash goes down, but equipment goes up. Okay. We buy miscellaneous supplies. Supplies are not equipment. They're things like paper and printer cartridges and toilet paper, all of that, short term. So supplies goes up, but we didn't pay for them. We said we would buy them in 30 days. We'd pay for them in 30 days. So it becomes accounts payable. And then here's one. Betty hires a receptionist. Receptionist will be paid at the end of the month. That's not an accounting transaction. There's been no exchange. The receptionist hasn't worked. So they've just been hired. Okay, they get cash from a customer. So cash goes up, revenue goes up also. They have a second customer. The second customer, they work $5,660 worth of service. The customer pays $2,000 now, and they're going to pay the balance at the end of the month. They pay a bunch of expenses. Cash goes down, 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 and it goes under the expense column. Sorry, one more. They pay a dividend. Normally you don't do that the first month, but we just want to show you how it works. Cash goes down, dividends is negative. So see how expenses and dividends are shown here. Then you add them all up and you make sure that it balances. So this is just an exercise to talk about transactions. Okay, but we really want to look at debits and credits. Okay, so debits and credits are an accounting system that was invented like 500 years ago by an Italian monk. And what it was created for was to show that every transaction affects at least 2 different accounts. Because at the end of the day, we want to create an income statement and a balance sheet and a statement of retained earnings so that we can know how our business is doing. Did we make any money, any profit? And then we also want to know, what's our balance sheet look like? Does it have assets, liabilities, stockholders' equity? How many assets do we have? How much debt do we have? Okay. So each account has its own T account. It's kind of funny that way, but T accounts don't exist in computer systems, but it's just a really, so like cash has its own, I don't know if you guys can see that. Let me know if you can. Cash has its own T account, accounts payable has its own T account, and so forth. And it's a real good graphical way. I mean, I like visual learning. I like graphs and pictures. So it's a real good visual way to see the flow of the accounts. Okay. So every T account, if you put a number on the left, that's a debit. If you put a number on the right, that's a credit. You can remember that because credit has an R in it. Okay. All right. For every transaction, you're going to hit 2 accounts, just like we did, or more, just like we did on the worksheet. All right. Now, this is a big memorization that you guys have to do, but if I were you, I'd take a picture of this, or if you have a printer, I'd actually print it out. And this is like a cheat sheet that tells you when do you debit, when do you credit. Okay. If you are an asset, you debit to increase. So for example, we opened a bank account and put $10,000 in cash. On your worksheet, you'd say cash went up 10,000. On the T account, we would debit the left side 10,000. And you know what I'm thinking? I'm thinking that my video probably reverses left and right. Let's do that. Video. I bet you it does. Hang on. Mirror my video. Yes, it does. There. Is that better? Can you see it now? All right. So got it right. So 10,000, increase cash 10,000. Okay. However, so if I debit cash, cash went up. If I debit accounts receivable went up. Supplies, land, and equipment. However, liabilities like accounts payable, okay. I'm going to do another T account here. Okay, liabilities like accounts payable. If I increase accounts payable, I don't know if you guys can see that. There we go. If I increase accounts receivable like 3,000, I credit it. Okay. So the only thing that debit and credit mean is debit means left and credit means right. Okay. So, all right. So how do you remember this? You have to memorize it. You have to memorize it. Okay. So if you have, this is what a lot of students will do. They'll set up, I'm going to make sure you can see this. They'll set up an account. You could just grab yourself some flashcards, put an account title on it, advertising expense on one side. On the other side, you show debit and credit, advertising expense. And then underneath you say for expenses, debits increase, and for all expenses, credits decrease. Okay. And that's how you're going to remember. You're just going to flashcard that, and we'll walk through that. So let's keep going. Okay. So liabilities are increased with a credit. How do you remember that? Liabilities are on the right side of the accounting equation. Assets are on the left side of the accounting equation. Liabilities are on the right of that equal sign. Credit has an R in it, so it's on the right side to increase. So we use language like, what is an account's normal balance? And that means what side increases the account. For cash, the normal balance is debit. For accounts payable, the normal balance is credit. Okay. Stockholders' equity on the right side of the equation, credit to increase. Common stock, retained earnings. Revenue is on the right side of the accounting equation. We credit revenue accounts to increase them. And again, we don't credit the categories, we credit the individual accounts. Expenses. Expenses are also on the right side of the equation, but remember, we subtract expenses from revenue. So we reverse it. So expenses we debit to increase. And dividends too, we subtract it, so we debit dividends to increase. We have lots of different expense accounts. So let's count these. We've got 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, and you might have a few more, okay? So this is like learning a language. There are no shortcuts here. You have to drill on these accounts, okay? All right. So let's put this up here. Assume a company has a beginning balance of 100,000 in cash. So I'm going to put that on the debit side. It then buys a car for 20,000. We need to decrease cash. If we increase cash with a debit, we're going to decrease cash with a credit. And that's how we show it. And then we can run a new balance here. And our new balance in cash is 80,000. Decreased, so it'd be credit. All right. So let's say the company, so let's go back. The company buys a car for 20,000. So cash went down, and now we have equipment. It's an asset. We increased equipment. So we debit it because assets are increased with debits. All right. So that journal entry would look like this. The T accounts, just like I put on the board. I'm not running a total here for equipment. You can, it doesn't matter. But if it's just one entry, the total is kind of repetitive. Okay. Company buys supplies for 2,000 on credit. There's no, I always ask this question, is cash involved? If cash is not involved, then it's accounts payable. So we're going to create the journal entry here. We're going to debit supplies. We bought $2,000 worth of supplies. Supplies is an asset. So we're going to increase it with a debit. And accounts payable is a liability. The company owes 2,000. So their liabilities have increased by 2,000. And there it shows here. So when you build the journal entry has to balance. When you post it to the T accounts, you have to have the same dollar amount on the debit side as you do on the credit side. All right. Leave that. All right. So in this chapter, let's see, did I add to accounts? I think I added more accounts. So for Monopoly and for your homework on Monday night, you have a lot of accounts here that you just have to remember. And for now, you can just refer to your reference sheet here. But by next Wednesday, you have to know how to do this, okay? So what I want you to, and there's more accounts here. So in this example in my PowerPoint, and you can watch that PowerPoint video again, you really want to use a pencil and paper, stop the video and say, what do I think the journal entry is going to be? And then practice the journal entry. And you may have to use your reference sheet of, debit and credit, but your goal is to remember more. Okay. So lots of journal entries, but it's 13. Our second test, there will be 25 journal entries, and our final test, there'll be about you'll need to know about 50 journal entries, 55 journal entries. I won't test you on all of them, but you won't know what's on the test. Okay. All right. So let's skip over to Monopoly. Okay. Does anybody have any more questions about journal entries in this chapter? Okay. Okay. All right. Let's let me stop share for a second. Come on. Sorry, my mouse is being kludgy. Okay. Not arriving at the other station. Okay. Can you guys hear me? My computer's locked up.
No, we can still hear you.
You can still hear me, but I can't get you to. I'm going to sign out of Zoom and I'm going to sign back in. Okay. I will. I don't know why it's doing this. Oh. If I can, we'll see if I can.